So if you guys, what I was saying, if you guys can see me and hear me, do me a favor and let me know where you guys are tuning in from. I'm fixing my camera now, so this will be the last step. But let me know where you guys are tuning in from. Myself, I'm in West Palm Beach, South Florida, where, you know, the palm trees are here. The ocean is blue. I have students in Chicago, LA, Central Florida, North Carolina, some students out there in Minnesota. Let me know where you guys are tuning in from. Where's everyone watching from? Okay, now we go to camera. Nice, we got Tampa. Hey, that's Abraham. I'm pretty sure that's my man Abraham. Shout out to Abraham. I'm glad you're here, bro. Okay, that's good. Whatever. You guys know what I look like either way. You know, this is me. You know what I mean? If you don't like the way I look, it doesn't matter because I'm going to teach you guys how to trade either way. That's what matters to me. All right, whatever. All right, cool. So, all right, guys. Yeah, no, I mean, so I see Abraham is from Tampa, but I don't know where anyone else is coming from. You guys, let me know where you guys are coming from. If you guys want to, you know, I like engaging with my students. I like engaging with my community. You know, I don't know where you guys are from. How can I possibly know where you guys are going? So with that, we're going to go ahead and get right into it. So first off, I want to say I appreciate everybody taking time out of their night to hop on here. We're going to go into a lot of information. We're going to get right into it. Shout out to Caesar. He's from Chicago, man. I got a lot of students in Chicago, about 100 students plus in Chicago. So shout out for you for being on here, bro. It means a lot. We're going to go into it. Markets have been very crazy the last couple of weeks. So we're going to go ahead and make sure that we cover everything that has to do with, you know, currencies, you know, Euro USD. We're going to go over the dollar in general. I'm not going to cover too much about other markets. Maybe I'll talk about it a little bit if I, you know, get the opportunity. But we're Forex traders here, so we are going to look at the Forex market, ladies and gentlemen. If at any point in this call something I'm saying is confusing to you, or, you know, it doesn't make sense, or you have a question that you've been waiting to get answered, you know, the last couple of weeks, whatever the case may be, don't hesitate to reach out and type your comment or type your question in the comments, right? The only dumb question is the question you don't ask, right? So remember that moving forward, all right? The only dumb question is the one you don't ask. I've been on back-to-back calls today with students, going over progress, you know, with the new university. So shout out to all of you guys that have been going through the new university. I've heard nothing but good feedback, you know what I mean? So that makes me really happy. I spent a lot of time on that. Yeah, you know, and the sky's the limit, man. You know, so I'm excited for what's to come for you guys, for future students. If you're someone that's you're on the fence about joining Cashflow, you know, this is going to be a call. You know, you can see how I trade. You can ask me questions about trading, and you can engage with other traders that are in Cashflow. So with that, like I said, we're going to go ahead, get right into the analysis for today. The pair we're going to be analyzing is Euro USD. This is a Q&A call. So if at any point while I'm going through this, if you have a pair you want me to look at, or you have a trade that you lost, you want me to break it down, whatever the case may be, feel free to interrupt me. And yeah, I'll answer your question. If the question is about the university, if it's about a trade, if it's about mindset, about business, whatever it is, these Sunday night calls, Sunday night and Thursday night, are geared towards answering your question, right? So as you guys can see here, it says for me right now that there's 8 viewers on. I don't know if that's accurate or not, but as I'm getting at, you can see that the numbers are a little smaller, right? So take advantage of that. If you guys are just sitting here watching, you know, that's fine. You can still learn, but obviously, you know, take advantage of the fact that there's smaller numbers in the class right now, and your question, you know, will get answered if you ask it. So with that, so we'll do a top-down analysis on Euro USD. Like I said, there's been a lot of geopolitical tensions that have been going on the last couple of weeks, right? Last couple of months, actually. It all started with Venezuela whenever that was happening with the oil there, with the president there. Then everything happening with Mexico, with, you know, I don't even know what happened in Mexico, but with the cartels there, that caused more instability. And then everything now finally happening with Iran and Israel, that is causing a lot of uncertainty in the market, and it has caused a significant increase in the DXY, right? For those of you guys that don't know what the DXY is, the DXY is a chart that represents the value of the US dollar, right? So we've all heard how the US dollar has lost value over the last 100 years, how whatever thing you might have heard about the dollar, right? But either way, what I'm getting at is that this chart helps you track the value of the dollar, right? Why do we track the value of the dollar? We track the value of the dollar because the US dollar is the most liquid and it is the global powerhouse of currencies. Every country, believe it or not, it's not the most valuable currency. It's not the most expensive currency on the planet, but it is the one with the most power. If something is happening in the US or if something is happening with the dollar, that is going to directly affect every other market on the planet, right? Whether it's a forex pair, whether it's a currency, whether it's a stock in another country, whether it's indice, whether it's metal from another country, whether it's oil or whatever the case may be. A question that somebody had wanted me to go over is why is gas prices getting so expensive? Because I don't know where you guys, what it is for you, but right for me, the last 6 months it was, $2, 70 cents, $2.80. I was happy, I was happy with it. Right now, gas the other fucking day, dude, it was like $3.80. You know what I mean? I'm staying home. I work from home, right? But I'm staying home right now because I don't want to spend money on gas, bro. It's $3.80, $4 a gallon, bro, for gas, not even diesel. You know what I mean? So I don't know what you guys are spending, but it is going up significantly. And it skyrocketed overnight. The day before, everything was announced with Iran with the missile strikes and stuff. Gas was literally at like $2.70. The next day, it was at like $3.50. So that's a huge jump in oil, right? So we're going to go into what's causing that, but we're starting off with the dollar, okay? So, like I said, this represents the power and the strength of the dollar. If we go back to the daily time frame, okay, majority of 2025 was spent with the dollar losing strength, right? Losing strength. This was for a number of different reasons, right? I'm not going to talk on this too long because it's kind of boring. But a number of different reasons. Whether it's political, there was things going on with the Fed. We're talking about moving chairs and then also interest rates going on with the Fed. There's just been a lot of moving parts that have been causing the dollar to lose value, okay? So, as of recently, though, as of recently, if we go back to the beginning of this year, right, so we're only going to look at 2026, right? So, this entire giant move has only been the last 2 months, okay? Now, it doesn't look like a lot, and we're going to pull this up on an actual currency pair in a minute, because it has been a lot. Right, so what happened, though, is that the dollar started tanking aggressively. It lost a lot of value. We were trading in this range since April of 2025, and we were steadily making some new lower lows, right? So we made a very low, right around here in the beginning of February of this year, right? So the beginning of February of this year is when a lot of the stuff with Iran started getting announced. Now, that is a whole other conversation for a whole different day about what's going on there actually, what the purpose of us getting involved there is, and what we can expect as a result from that. That's a different conversation for a different day. But as of right now, right, we're going to talk about the effects of what's happening in Iran and why it's causing the dollar to gain strength, okay? Because a big confusing thing is we're starting to get into the lesson now, okay? So in trading, right, as you guys develop in your trading career, right, macroeconomics and political stuff is going to be an important factor in your trading. Ollie, that's confusing. I don't want to learn that stuff. You don't have to in the beginning. It's not a necessary thing for people to learn in the beginning. Their first 2 to 3 years of trading, you'll need to worry about that stuff. But I'm pretty sure that all of us on here want to become multimillionaires, want to be financially free, and want to make $10,000 a month at a minimum from pressing a button on your phone for the rest of your life, right? So in order for you to do that for the rest of your life, at one point or another, you will need to learn politics, right? You will need to learn how the economy functions, right? But that's what I'm here for, right? I learned it all for you, so all you got to do is go watch my videos, right, that I have in Fundamental Data Mastery inside of Cashflow University, right? But if you're not at that point yet, it's completely fine. You don't need to know this stuff yet, okay? But I'm gonna break down as to why. Right, so what we're gonna go over here where I can make this a little smaller, or I'll just go to a different chart. Actually, let me go to a smaller time frame. Hold on, guys. We'll go right here where it's empty. Okay, so the first thing that I want you guys to take note of, right, is the topic of risk on versus risk off, okay? So risk on versus risk off assets, right? What this means, right, is in a macro sense, right, in a bank sense, in a large hedge fund institutional sense, okay, the way that people invest their money, right, is not the way that you and me invest it, where we're looking at a chart and we're trading for the hopes of making money, right? The way that institutions and billion-dollar funds and trillion-dollar funds operate is risk versus non-risk, okay? So a risk on asset versus a risk off asset, okay? A risk on asset is gold, right? For example, right? You have gold. Ugh, I got a new mouse. I'm learning how to use it. Let me see. Okay, I'm not going to do that. All right, so we got gold first, right? You have metals, anything like a stock. You know, I'm writing really sloppy, but bear with me, right? A stock, right? Real estate, anything of this nature is considered a risk-on asset, okay? These things pump more and they move more when there is certainty and confidence in the stability of the economy, okay? So what does that mean? When everybody is comfortable and they don't think anything is wrong, people are more comfortable putting their money into riskier assets, okay? It is a risk-on asset. All right, what is a risk-off asset? A risk-off asset is something that is stable, it's something that is pegged, and it is something that is a for sure thing, okay? So the most prevalent example of a risk-off asset for you guys and pretty much the entire planet, right? The number one, damn dude, this mouse fucking sucks, dude. I got, that what you guys see, I got one of these mouses where it's like a wrist mouse or whatever. You know, don't let people sell you on that shit, dude. Pay like $100 for this thing. I hate it. But I got sold. But either way, so a risk off asset would be USD, right? The US dollar, right? In this example, let's say that you start seeing everything online, saying that the market's crashing, crypto's crashing, the stock market's crashing, and the economy's going to shit. What are you more than likely going to do with your money? Right, if you have $100,000 invested in the stock market and you read a headline, the stock market is crashing, what are you probably going to do with your money? More than likely, you're going to sell it, right? You're going to sell the stock and exchange it for USD. You're going to get cash, and you're going to want to hold on to your cash, right? Because you're scared, oh shit, what if I need my money because, you know, the economy is going bad? What if I lose my job? What if this bad thing happens? Whatever, right? So in that sense, okay, that is exactly what's been happening on a macro scale with this war going on in Iran, all right? That's why even though gold and even though oil are assets that have performed amazing over the last, 5-10 years, those are assets that right now have been going down. And I'll show you guys on a chart in a second. But the reason why they've been going down, though, is because, yes, gold is a safe haven. Yes, oil is a for sure thing. It's always going to go up in value, right? But it's not safe if you need money now, right? So at a macro scale, people are freaking out. Literally, like the last 2 weeks, there's been billions of dollars liquidated, trillions probably, from every global market because of everything going on right now in Iran, right? So with that being said, the dollar is gaining strength, not because the news is good, right? Because in the course, I have a concept where if it's good news for the US dollar or for the economy, if it's good news for the US, the dollar usually goes up in value. If it's bad news for the US, the dollar usually goes down in value, right? So even though we're going to war right now and we're invading another country and we're sending troops over there and we're spending billions of dollars to aid this war, that's all bad news, right? There are millions of homeless in this country. That's getting reported every single month, right? There's literally hundreds of thousands of people that are unemployed. That number is steadily growing. Interest rates aren't getting cut right now, and inflation is still relatively kind of high. So we have our own problems here in the US, is what I'm getting at, right? We have our own problems here, right? But we're over in Iran, right? So even though there hasn't been good news for the dollar, there hasn't been really any positive news for the dollar. FOMC hasn't been good news. NFP hasn't been good news. For those of you guys that don't know what that is, those are news releases that happen periodically that basically tell you the performance of America in general, right? These are news releases that get posted bi-weekly or monthly or whatever the case may be, and they give you insight into how the economy is reacting to these news releases, right? If you guys want me to do a video about that, I have videos in the course, but if you're not a student, I can make an entire in-depth video about how the news releases work if you guys want me to. If you guys want me to do that, just drop a 1 in the chat for me if you want me to make a detailed video about how the news actually works. Drop a 1. But either way, to get back on topic, right? So even though even though America has been having bad news in the economy, right? Even though everything technically bad has been happening, right? The dollar is still gaining exponential strength, right? Why? So even though the dollar is having bad news, okay, the dollar is still seen as a safer investment than putting your money elsewhere, okay? So I'm going to go into another little bit of a lesson, okay? Side topic, right? This is my first live stream back in like a couple weeks, you know what I mean? So I'm going to refresh you guys, okay? So with that being said, okay, the way that Forex works, right? The way that the actual currency trading works, okay? There's Euro and there's USD, right? Euro and USD. Each currency has something known as an interest rate, okay? These interest rates, basically, it's not an interest rate like a credit card, or it's not interest rates like a loan. It is a loan, but it is an interest rate that's dictated for banks, okay? It's called a interbank, not the interbank market, bro. Fucking what's it called? Whatever it's called, right? It's the bank. It's bank-to-bank transfers. It's bank-to-bank transactions or something of that nature. But the way that banks work, right, at an institutional level, if they see, for example, right, this isn't accurate at all, but I'm just doing it. I don't want to look up the accurate numbers right now, right? Let's just say that Euro is paying 3% interest, right? This is a 3, right? 3% interest, and the dollar is paying 5% interest, right? What this means, right, is that a country from Europe, right, can exchange their money for dollars, leave it in a U.S. bank account. To sum it up, I'm summing this up very roughly, right? If they leave it in a U.S. bank account, they are going to get 5% interest per year on their money versus 3% interest per year on their money, okay? So whenever the Fed is talking about dropping interest rates, the Fed are the people that control the value of the U.S. economy, guys, all right? So whenever the Fed is talking about lowering interest rates, they are talking about bank-to-bank transactions, right? If this number goes down, okay, that usually means that the pair Euro-USD goes up. Why? Because the euro seems more attractive, right? So the way that it works usually is the pair or the currency that has the higher interest rate usually is always going to be the dominant currency, okay? Why? Because banks, millionaires, billionaires, the secret trillionaire families, you know, whatever it is, they're trading Forex at a macro institutional level with billions and trillions of dollars, right? So where that 2% interest makes a huge difference, okay? So now yen, for example, the Japanese yen, was notorious for their extremely high interest rates in the past. But like a year or two ago, they cut them significantly. Like they cut them like 6 times in a row. And now it's not as powerful. I don't even have USD/JPY on here, but it's not as strong of a currency anymore. So before, USD/JPY would move like this kind of, because the yen was very comparable or better than the dollar in what an investor would get paid from interest, okay, by loaning their money to a Japanese bank, right? When they loaned their money to a Japanese bank, they were getting like 7 or 8% interest, so they were making really good money. When that starts getting cut, and now it equals the same thing as the US dollar, 5%, you're not getting this kind of chart anymore, right? If USD JPY, USD is first, the chart is going to start looking more like this, right? Even if they're the same price, even if they're the same interest rate, but the dollar, if they're the same value, if they're both at a 5% interest, the dollar is always going to win, right? Because it's the dollar. It's that simple, right? Why is it the dollar? It's because it's the dollar, right? It's the American dollar. That's literally the reason why. It sounds stupid, but that's literally the reason why. If there are two currencies of the same value, the dollar is going to win that trade every single time, right? That's just how it is, right? The dollar is always going to have more confidence and always going to have more trust as long as, if the interest rates are the same. But let's say, for example, that USD JPY was still at 7%, then the chart would look like this. It would still be going up, but it would be primarily going down, right? Because the yen is a more attractive investment, right? So I know that was a lot, right? I know that was a lot of like mumbo jumbo, right? But this ties into why the dollar is gaining value, right? So even though there are pairs and currencies that pay more money, like the Swiss franc, for example, or, that's pretty much the only one. Or even the yen, or not the yen, even the pound has a higher interest rate. I'm not for sure. But I know that the franc pays more, right? Even though the franc is considered a safe haven currency. Let me do this. Hold on. Right? Even though the franc is still considered a safe haven currency, right, it has still been gradually pushing back up now, right? So in this distance, we've gone 300 pips already in the US dollar's direction. All right, so now if we go look at Euro USD, the most traded pair in the Forex market, the pair directly traded against the dollar the most, right? Now we look at this. Now we're tying everything back in together, guys. I know that was a lot. Shout out to you guys that actually, understood that and, stuck with it, right? But now that we understand how the currencies and the interest rates work with each other, right? And how risk versus non-risk, right? So even though the dollar's been having bad news because of the uncertainty in the market, it's gained a lot of strength, right? Even though euro has had nothing but good news, right? And even though the euro's interest rate has not dropped, and even, the euro is doing very well, it's getting melted compared to the dollar, not because it's performing bad, but because everyone is liquidating their accounts right now and storing cash, right? So that's why the dollar has been gaining so much strength, right? This is where we were at in January, peak of January, and beginning of February. We were at 1.2 thousand, which is a major whole number zone, a very major psychological level, right? And since that point, in 1 month, we've dropped 662 pips, guys, right? That is an insane move, right? It doesn't, if you guys that don't know trading and that doesn't sound like a lot, that's a fucking massive move to happen that fast, that aggressively, where the last months before that, months and months and months and months and months and months before that, we were spent growing towards this price, okay? So if we look back, we first came to this price in April of 2025, right? Since April of 2025, we've gone up, we've gone down, we've been fighting this price to get it as high as it can go. As soon as it got up to 1.2 thousand, a whole number zone, just so happens that's when everything political happens as well, right? That's market makers a little bit, right? But that's how that is. They manipulate this stuff to make it happen. And what took an entire year to get up to that point was melted and liquidated in 2 months. In 2 months, in a month and a half, 47 days, in a month and a half. An entire year's worth of trading has gone completely down. So where are we at right now, right? So everything that we just said was said that way we can do a current analysis, right? When you're trading by yourself every single day, are you going to be doing this much of a detailed look? Probably not, right? But we're here to learn. I'm here to make sure you guys understand what's going on with the market. That way you don't trade stupid or make a not stupid, don't trade stupid, that's bad of me to say. That way you guys don't make a premature decision when you're trading and buy when you should be selling, right? Right now, we are in the dollars market, right? Usually, I am more of a buyer, okay? Usually, I am more of a buyer. Most of my trades typically are buy positions, okay? Every buy position that I would have taken would have lost on this trade, unless we got lucky and we got it down here. But there hasn't been any buy opportunities, okay? Everything pretty much has been just sell city. You know what I mean? It's been a massive trend, okay? So right now, what we're looking at is two things. We can either, one, look for a potential reversal, which I wouldn't be confident in timing a reversal and what's going on right now. For all we fucking know, tomorrow Trump says, you know, I don't even know. I don't even know what he could fucking say. You know, but let's say he says something about Israel or about Iran or something with the Epstein files comes out, and you know what I mean? You don't want to be on the opposite. One thing I would say with this, confidently, in the next few months of trading, I personally am needing to adjust and change my style a little bit to not be so biased, okay? Because it's not a good idea to be betting against the dollar right now, right? Does that mean if you're trading gold, does that mean you should be buying or selling gold? I don't really trade gold. But if we go look at gold really quick, it's been moving very similar, right? Where it is getting, you know, it is respecting resistance, and it is respecting what's going on with the economy right now. Even though gold is an asset that has lasted over the years, bro. Look back here. Same time, August of 2025, gold was $3,000. Now it went up to $6,000 almost, right? But same exact situation that I just showed you guys on Euro US. We pushed up all of this year. We pushed up to make this all-time high. Now we are in an area where we had a higher high. Now we had a new low. Now we had a lower low, lower high. Lower high, lower low. Now, so it's starting to get a little bit trickier, right? So where everything is not lining up with a bullish structure anymore, okay? Granted, we still do have trend, right? We still do have trend. Trend is your friend until it bends, right? We still do have trend, but it is starting to get broken a little bit, right? So is gold a good buy? I don't know, right? That's what I'm saying. At this current moment, the dollar is the better trade. Okay, how far is that going to go? For the gold traders, if you guys want me to analyze gold more deeply, I will at a different time. I don't really trade gold, but I'm going to go back to Euro USD, but they move very similar is what I was getting at. Gold and Euro USD move very similar because they're both pegged against the dollar. You know what I mean? When you're trading gold or you're trading Euro USD and you're buying, you're saying that the dollar is going to perform poorly. You're saying that the dollar is going to lose value. When you're buying the pair, if you're buying it Euro USD, you're expecting the dollar to lose value. If you're buying the pair USD JPY, where USD is first, then you're expecting the dollar to gain value, okay? So since Euro and gold are both traded against the dollar, I wouldn't be personally surprised if this did break lower, right? Right now we are in a strong downtrend, you know, and there's a quote, right? Don't be the guy that catches a falling knife, all right? And that's a very true quote. You know what I mean? It's easier to ride the wave than it is to time the bottom. You know? Let me know if that makes sense. Because a lot of people do struggle with that when it comes to reversals. You know, where it always is better to ride that wave instead of timing a reversal. So now for Euro USD, let's look at Euro USD. That's the pair that I trade. What are we doing right now? Where are we at? Okay. So let me get some water really quick, guys. You're chilling. Hey. You can't always be smooth, man. You can't always be smooth. But either way, it's funny because this is a copper bottle and the mouth on it is huge. You know what I mean? So I've spoken on myself a couple times. But either way, so what we're looking at is let me see. We're on the 15. Yeah. So right now we are in a descending channel, right? That's very easy to see. We could just trade this directly as is. More than likely, that probably is what we're going to be doing tomorrow morning. So I'm going to be live tomorrow morning at 8:15 again, and we're going to be trading this pair. Just based off of looking at this right here, we're going to do the rest of our analysis in a second, but just based off of this right here, it looks very easy to tell that we're setting up for a continuation where we hit this bottom, right, of that bottom trend. It's very easy to tell we're probably more than likely going to come up to around this area, which is actually another, what price is this? 4,700, which is near 4,750, which is a quarter level zone. So more than likely we could expect to see this continue down. I wouldn't trade it right now because we're in Tokyo, or moving into Tokyo. But let's see what else we can find. Let's see what else we can see. So right now, like I said, we're in a descending channel. We're looking at the 15-minute time frame. If we go to the hour, where did price stop? So price stopped at right above 4,000. Let me move my box up here for you guys. Right, so if we're looking at our crosshair, right, and we look at the right side of the screen and we look at these numbers, right, if we line this up right here at the bottom, that number says 1.14120. Okay? That is very close to the whole number zone, the major psychological zone, which is represented by this green line, which if we look to the right side of the screen, that number is 1.14000. Okay? So, using our math, this is 12 pips away from the whole number zone. Right? In the courses, I talk about how price doesn't always move to the exact place you want it to go to. Usually, it's going to either move in a zone. So I like to usually go 10 pips above, 10 pips below. Okay? If we look 10 pips above, we went right into that zone. Right? And as soon as we went into that zone, we started pushing up, respecting the channel. Right? So that's a good confirmation that this probably is going to continue in that area and follow the trend, right? The only thing that's going against us is if we were to sell here, up at that top point, for example, we're betting that the pair is going to break below 4,000, right? What we're saying is we're expecting the dollar to gain more value and gain more strength. Right, so if we were to enter for a position up here, I'll leave this here for tomorrow morning, actually. I'll leave this here. If we were to enter this, I would probably put my stop loss right around here, right above this high. And I would just target a 3-to-1. So a 3-to-1 would be right around here, right at 4,000. So the higher we can get on this trade, the better it will be. So first confirmation is that we are respecting the channel. Right, confirmation number 2 is that we actually did respect the whole number zone, right? And we are pushing up off of that now, right? So that we have 2 confirmations as of right now. Confirmation number 3, a weaker confirmation, is the strength of the dollar, okay? The strength of the dollar itself. If you guys were to go to a currency strength meter, more than likely the dollar is stronger right now in a macro sense, right? So the dollar is worth more, right? That's confirmation number 3. Right, so now if we were to start adding on our additional layers, okay, let's hide the drawings. Let's look at here first, okay. As of right now, this is the 1 hour time frame, right? We're going to be trading 8 hours from now, or 12 hours from now, right? It's literally 12 hours from right now. 8:15 in the morning, I'm going to be live, and I'm going to be trading, okay. With that being said, we need to be expecting where's the market going to be 12 hours from now, based off of what it's doing right now. Okay, so as we can see, what are our oscillators doing? Right, we're pushing up and we're pushing up. Right, the stochastic is starting to push up. This one's the RSI. It is starting to keep pushing up, right? By the time this lines up, you can kind of already see it if you look at the crosshair, right? If here is when we go down and we look at this, we can see these pointing down. If here we start going up, and then here we start going back down. Right now we're going up, so probably right around here is when we could expect for this pair to start going back down. So what we're going to be waiting for, it's going to look a little messy because I'm going to put my drawings back on, right, is we're going to be looking for the RSI to do this, and we're going to be looking for the stochastic to start looking like this, right? Once they start looking like they're starting to bend over, and that more than likely is going to be right around this point. Just based off of how the chart looks, right? You don't gotta be crazy smart to see that. Just how the chart looks, right? It's probably gonna be around that point, right? So if the chart is at this point, that will be an additional confirmation for a sell, right? We're not there yet, so there's no opportunity right now, right? Granted, could we go in for a buy and target up here? Yes, but that is, you know, to an extent that's not immature, but irresponsible. That's irresponsible trading because you're trading based off of a hunch at that point, not probability. So if we're looking at probability based, right, getting a trade from here, taking a trade from here to right there, yes, that's 30 pips. Is that worth the risk when you're this close already to the top of the channel? Is it worth the risk when you're that close to the top of the trend? Is it worth the risk at that point when you're in the middle of transitioning trading sessions? Probably not, right? So the smarter thing to do is if you're on a computer at this point in time and you see a pending opportunity in the market, is just line it up and wait. Just line it up and wait, right? So now we have, we can see what we were expecting from our oscillators. Now let's go look at this really quick. This looks bullish. But just because we're trading below the EMA line, but that's bearish that we're trading below the EMA. Anytime the market is below this yellow line, that means that it's probably going to keep going down. Anytime it's above that yellow line, it's more than likely going to keep going up. I have full in-depth videos teaching that as well. But concept being is eventually, more than likely, the market's going to keep bouncing around here. And then eventually it's going to need to come back to this yellow EMA line. It's going to need to meet the EMA line again, right? And I'll show you guys what I mean by that right here. Anytime the price gets too far away from that yellow line, it needs to come back to it, right? Perfect example is right here, right? We got super far away. We were trading very aggressively, selling very aggressively. But as time went on, right, we had to come meet the EMA line, right? And when we met it, that's when another really good opportunity to sell came in, right? So more than likely what's going to happen here, again, is the exact same thing. We're going to come up, activate this trade, more than likely float back down, consolidate at 4,000 for a little bit, and slowly start working our way back up until maybe around here where the EMA line will meet. And then that's where the decision will be made. Are we going to continue pushing up now and break above the EMA line, or are we going to continue following trend and go back down, right? So these are all things that you don't know yet. These are all things that you don't know until it's in front of you, right? But being aware of how these things work before it's in front of you will help you not lose trades unnecessarily. Yes, it's a lot of complicated stuff. Yes, it looks like mumbo jumbo. And yes, you need to learn when and where to apply this information. But that's the magic in it, man. You learn it, and when you know it, right? Same thing with a doctor. You know, you can't expect a doctor to, you know, remember open heart surgery off of, you know, their first time reading about that in a textbook. You know what I'm saying? Or their first time seeing it in a classroom. You know, it's more than likely they're not going to do it that good. You know, more than likely they're not going to remember it too much. So same concept for this. Yes, it looks like a lot, but eventually you will remember how everything works and what it means, right? So that's the EMA line. This doesn't look like sell opportunity. The only reason I would say maybe this is sell opportunity is because we've been in a downtrend. We've been riding the bottom Bollinger Bands, which are these blue lines. We've been riding them in the video about in the course in phase 3. When I talk about indicators in the video about Bollinger Bands, I go in depth about what I mean where it's riding the bands. Basically, it's supposed to go up and down, right? But since it's only going down, right now we're using the middle gray line as a resistance line, right? If we look right here, isn't this line very close to that gray line right now, right? So why, that's another reason why we wouldn't want to just buy right now. Even though we're expecting it to go up still before we sell, that's why you shouldn't buy right now. Because there are other things that are showing it could go back down right now, right? It could, right? So the whole concept of trading is, and this is a confusing thing, so I'm going to take a little second to say this, right? A lot of people struggle with this in the beginning. Whenever people first get started trading, and even as you develop as a trader, a lot of people try to box themselves in on like, this is how it needs to be. This is how it needs to look. This is how it needs to be set up in order for you to take the trade, right? And that is something that people teach, you know, especially to beginners, in order for you to, like, you know, learn discipline, or, you know, learn how to only look for good setups. But that's a very unrealistic thing, because you're never going to get that, right? You're never going to get a cookie cutter setup. You're never going to get something that's there every single day, right? So what I've developed over the last few years is a point-based system where I have multiple different tools, multiple different confirmations that I like to use, and about 15 of them. And if I have 5 confirmations on my trade, I will take the trade, right? But if I have 5 negative confirmations, I'm not going to take the trade, right? So as of right now, do we have 5 positive confirmations for a buy or sell? No. So we're not going to buy or sell. Do we have any negative confirmations that the market could, you know, juke us out? Yes, we have 2. We have a couple things. 1, that we're at 4,000. 2, being we're at the middle Bollinger Band. So we don't know. There's no certainty yet. So if there's no certainty, it's certain that you shouldn't trade. You know what I mean? So with that being said, the next thing we're going to look at on the hour, and this is on the hour, right? You can drop the time frame. If you drop to the time frame, it changes, right? You go to the 15-minute, right? We're a little closer, right, to the EMA line, which is even better for our sell signals, right? Or for our sell idea, right? Because if the market is already this close, right, already this close to the EMA line, we're getting multiple sell signals already happening. We're pushing the top band. More than likely, by the time we get to here, the EMA line is going to gradually probably move down to right here. So that's a good confirmation for us that it's starting to line up a little bit more. Now we drop to the 15-minute, it lines up a little bit more. All right. So next confirmation, next tool. Let's see if we have another tool that we can use here. Let me go back to the hour. Let me hide this. Oops. Let me look at this really quick. I forgot to even mention this. Another secret one, not secret one, it's called divergence, right? You see how these are going up right now? This is going up. This one's going up. This one's going up. But the overall chart is going down, right? That usually is a sign that a reversal is about to happen, right? That's called divergence, right? There's correlated divergence and there's negatively correlated divergence. I'm not going to go into that right now. It's confusing, but basically I have videos about that. If you're a student, though, go watch the videos and ask me if you need help with that. But if you're not a student, I'm not going to spend too much time on that right now because it's confusing. To sum it up, though, it's basically where very summed up, if these lines are saying the chart is going up, right? But this is saying it's going down, right? There more than likely is going to be a very big move in the market, right? More than likely, it is going to be an upwards move, right? Because this is moving up and this is moving down, right? When they're opposite, that's usually how it goes. So for this example, right, the chart is moving down, and this is a rough example, right? But we're starting to move up, right? So that means that this is probably going to continue going higher, not forever, but for right now, right? For right now, right? So that gives us confirmation again by maybe tomorrow morning, the divergence will be finished, and this will be in a position where it's more appropriate for us to sell it confidently, okay? So that is another confirmation. That was just a quick little side one. All right, now, does that make sense? I mean, before I move on really quick, to the people that are watching, does divergence make sense? How I'm saying how this pointing up and the chart going down means that the chart probably will go up? Does that make sense? I know it sounds a little bit counterproductive. Hold on. I know it sounds a little bit counterproductive, but does that make sense how divergence works? If not, I'll write that down and I'll do on Thursday night's call. I'll do like a more in-depth like training on that. But like with what I'm saying up to this point, I know I'm kind of going all over the place, but is what I'm saying making sense as of right now? Is there any questions, any comments, any concerns, any confusions? Or if you guys are good with me moving on, then type a 1 in the chat for me. If you're good with me moving on, type a 1 in the chat for me. After hours hustle says yes. So I guess that means we're good. I don't know if you're a student or not, bro, but if you're not, happy you're here. So I'm just gonna move on, right? I'm gonna move on. But if you guys need me to go back, you just let me know. All right. So next confirmation. Okay. What's your name, bro? You are a Cashflow student? What's your name? While you type that, I'm gonna pull this up. Right. Next confirmation. That next tool we can use for confirmation. Oh, okay. What's up, Jesse? Nice to see you, man. Okay, next one is going to be fluid trades. Right, so this is pretty much a good confirmation for us as well. Why? Right, because there is no demand area right here. Right, there's no demand, meaning that price, in order for it to continue going down, it needs to collect orders. Right, it needs to hit stop losses or take profits, pretty much is what I'm getting at. So with that being said, if this said demand right here, more than likely we would continue trading, right? But since there is no demand area there, let's see where the most recent one is. Let me hide this again. Yeah, dude, I got this microphone in my face. Sometimes it's hard to see see the screen. Let me go to the daily. So that what I literally was just saying. So on the daily time frame, we are in the middle of a demand zone, meaning that price is probably going to start getting scooped up right here, meaning buy orders are probably going to start coming in throughout the night, throughout, you know, the rest of this week. So this is a daily time frame. So this is what's going to be happening throughout this week. Is in this area, buyers are going to start entering positions and sellers are going to start closing positions around here, right? Meaning that same thing we've already been saying, that this downtrend is probably going to need to come up a little bit. Right, whether it's up to here, whether it's, you know, wherever it is, it's going to need to make some sort of upwards movement. Let me see here. Now I'm blocking it. Right. So that's on the hour. Now that's on the daily. Now let me look at the 8 hour. Now we can see that one. Same thing. We're in the demand area. 1 hour. 1 hour shows no demand. That's just because it's on a smaller time frame. So what this is saying here on the 1 hour time frame, since you're not seeing a demand box but down here, that means basically there's a lot of selling pressure is what that's saying. That means that there's no demand for buys right now, right? That's literally what that means. So demand for buys or supply for sells, right? So there's supply for sells up here, but there's no demand yet to push it all the way back up to here. right? So more than likely, like what I've already been saying, more than likely, we're going to come up a little bit, take some sell orders and take some buy orders out, and then move back down. That's what I could probably see this doing based off of that. Now, last quick thing we'll see. Let's see, 15 minute. 15 minute is showing us what we just said too. 15 minute, we hit the demand zone. Probably going to trade here throughout the night. By tomorrow morning, we're more than likely going to be around here. So I'm chilling with that. I'm happy with that. Now let's look at this one. Look at this. Same thing. Weak low, strong high. Weak low means we're probably going to continue lower. That's on the 15 minute. That's also on the hour. Weak low on the hour. Same thing on the 8 hour. Weak low on the 8 hour. Weak low on the daily. So we're primed for this to keep going down. It's just a matter of how far are we going to trade, right? Are we going to, and I'm confident over tonight. I think tomorrow morning setup is going to be pretty good. I think the way it's looking, either it's going to be a for sure win where it's going to just go straight to take profit, or if we lose it, it means that the dollar is losing strength now, and that everything that's happened over the last 2 months is starting to reverse a little bit. And go back up in price for Euro USD. So I do think a continuation is possible. The last thing that I'll do, now that I have all of my indicator confirmation set up, I have my price action set up, the best thing that I would like to look for right now, I'm going to drop to the 15-minute time frame. And I am going to draw a bearish Fibonacci. A Fibonacci is a tool that I like to use. Where it literally just makes your trading so much easier to help you find these reversal points. So here, I would draw it here. I would draw my, and that lines up literally absolutely perfectly. I would draw my fib from this point, this high. Look, let me hide this. That way you guys can see this, right? I would draw my fib in this situation from this point down to here, right? There's a reason why I'm not drawing it from here to here, right? The reason being is because when you're using fibs, right, the most important thing is swing movements or aggressive movements, okay, where you're looking for the macro of the move, not individual pieces in the move, right? So yes, this technically right here would be considered the most recent high, and this would be considered the most recent low, and you could draw a Fibonacci on here just like this, where you draw it from this high to this low. Let me delete this one, right? And you could see potentially that this does line up, and it looks like we could be selling shortly, right? Where right now we're entering the blue zone, we're entering the cash flow zone, right? So when you're in the cash flow zone, that means you sell or that means you buy, right? But we're very close to it already, right? We're really close to it, right? And using trading knowledge and trading discretion, by the time we get to this point, it maybe be 9:45, maybe 10 o'clock at night, right? That means we're entering a position in the middle of Tokyo Open, in the middle of a session that has nothing to do with Euro USD, right? It has nothing to do with this pair. So really, what could happen is you could get in this trade tonight and be in it all night long until tomorrow morning when it makes its move. Or you could be in this trade, get in early, get in right here on the first fib, and then get stopped out before it ends up actually going down, right? So how do we avoid that? Okay, it's like I had just told you guys, where it's the swing high or an aggressive move, right? So if we're looking at the chart, right, which move looks more aggressive, right? This movement down, where we pretty much went straight down, really straight down, or is this move more aggressive, where we went down, yes, but then we had some gradual consolidation and then we went down, right? On my eyes, judging it, I would say this one looks more aggressive because it is just one straight move, right? One straight move, right? Now, if we go to the hour, all of that kind of is one movement, right? One movement where, so let me mark it up here, that way you guys can see. So we're looking at right here. On the hour, that's right here. Okay. Now, in my opinion, I think that looks better for a fib because it's a larger structure, right? It's a larger move, right? And it's not measuring a micro movement in that big move, right? So on the 15-minute time frame, when we would drop down, you could, again, put it from here to here, but that looks a little premature. What I would do instead, I would draw the fib from the aggressive top to the aggressive bottom, right? To the aggressive bottom. And all this does is it just gives you a little bit more breathing room, right? And it shows you, all right, well, we're not missing the trade, right? So the ideal entry for this trade would be right here in the middle of this blue zone, all right? Now that we have an idea, we can zoom in a little closer for our best entry, right? So now we go into the 5-minute. All right, we're leaning in here, and we're just seeing this, right? Again, this box, this is towards the end of the lesson too, and then we're primed and we're set up for tomorrow, right? But let me finish this first, right? This blue box represents, it's officially known as the gold zone if you look it up on Google, but in cash flow, it's called the cash flow zone, right? So this is known as the cash flow zone, right? Anytime the chart is inside of the cash flow zone, more than likely, you're going to get a reversal, okay? So in this instance, right, if we're here, we started down here. This was the move. Option 1, we're going to come here, in this zone, move down. I don't see that happening, personally. What I think is going to happen is we're going to come to zone 2, anywhere in this zone, right? Anywhere in this zone, and then go down, right? So, with that being said, let's look at what's in this zone. Let's give ourselves a clearer idea, okay? Let's look at this dash line. What is the price for this dash line? 4,700. That's a whole number zone. Very good for me, right? Whole number zones are very good, right? That means that we're probably going to reject at that whole number zone. If we go to the white line, what is this one? This one is 4,750. That one is cleaner. That one's a quarter level zone. That's the one I'm going to end up keeping, right? So I'm going to delete this dash line because I don't want to have a bunch of lines on my screen, right? I just don't like to. I don't want to, right? And now we have a simpler look, right? Even the trend line that the Fibonacci gives us lines up with the trend line that I already drew, the red one. So, yeah, so we'll leave that. So if I was to get in on this trade, I would more than likely enter at 750. I would put my stop loss above this previous high, which is right here. We're going to put that right around 15, 17 pips, more or less. And we're going to target a 3-to-1 risk to reward ratio. If I'm risking $100 on this trade, I am going to make $300 at a minimum. Right? If you're risking 100, I'm aiming to make $200 to $300 at a minimum. So we're going to put that at 3-to-1 right there. Boom. That's the trade. Right? So ideally, tomorrow morning, if everything is lining